Hello everybody. Welcome back for another video. Hope you're all doing well and that you're all having a great day. Likes, comments, and subscriptions, as always, do help out the channel immensely. Welcome back to another holiday-themed edition, of News I Missed, where I go over all the weird and wacky things that are happening within the cryptocurrency space that I missed. And without further ado, let's jump right into it. About 17% of Bitcoin's total circulating supply is now held by retail investors. That's everyday normal people. According to recent public blockchain data curated by analytics firm Glassnode, they said, not perfect yet, but solid for a 12-year-old asset and definitely trending in the right direction. This was said by Will Clemente, an analyst at Reflexity Research. In response to the data, Bitcoin supply disperses over time, while fiat holders' base concentrates to whales over time. I find it quite interesting that this is once again beginning to pop up in the news when it wasn't air quotes news for a very long amount of time. Many years and many moons ago, the idea was that Bitcoin is for the everyday person. It's not for the rich. It's meant for the people, mostly for the people on the planet who do not have access to financial institutions or to financial whatever, or banks. Because once again, banks don't like poor people. Got to keep reiterating that because I think a lot of people keep forgetting that point. So roughly around 2016, 2017, a lot of people began to do metrics on decentralization because the idea of decentralization was becoming such a hot topic. A lot of people were looking at different coins and they were saying, this coin only has 100 nodes. Bitcoin has 10,000 nodes. Therefore, Bitcoin is more decentralized. This coin only has this for its metrics, while Bitcoin has this, and therefore your coin isn't as decentralized as Bitcoin, and therefore is not decentralized at all, whatever people were telling themselves. One of the other metrics that larger accounting firms and banks and other institutions who were side-eyeing the cryptocurrency space began to look into was the actual distribution of wealth within the cryptocurrency space. Why? This also tied, at least years ago, into the idea of decentralization. You want to make sure that all the money is not centralized, that there is not, as we have on this planet, there are three people, 3 people who own more wealth than 4 billion people on the planet. That is a heavy, concentrated centralization of wealth. So the idea was this has to not happen in crypto. Why? Because if 3 people own half of all the Bitcoin that there is out there, what's the point of Bitcoin? We need another solution because the point of Bitcoin is supposed to be that it's for everyone. It's not possible for everyone to own an entire Bitcoin, but I think if you slimmed it down or did the lower digits, I think every person would be able to have 300,000 Satoshis. I think that's the number if Bitcoin were evenly divided amongst everyone living on the planet. Of course, that's, neither here nor there. So when people began to look into these numbers and had actual data, this was even before Glassnode and Santiment popped onto the scene. People began to look and said, well, I think at one point, this is when we were finding out how centralized Bitcoin mining was back in the olden days, where China controlled about a good 50 to 60% of the Bitcoin mining power. That's where the idea of a 51% attack came from. Everyone was like, well, we don't want that to happen. We have to figure out some sort of kind of solution, because if we find out that Bitcoin, the number one cryptocurrency, is centralized, then what about the other coins? So that created that discussion of trying to move mining power away. The other one is who's holding the most Bitcoin? You've seen the news before. It's always a very big topic. This company just bought 47,000 Bitcoin. This company holds 147 million bajillion Bitcoin. These people just bought 78,000 Bitcoin. It's always in the news. It's always a hyper topic of discussion. But then when you actually look into how much Bitcoin the rich people are holding. And this is exactly why we're going over this, for those of you who didn't catch the drift, because I want you to understand what these numbers mean. A lot of times people assume that over the course of a bear market, that everyone is acting bearish, that no one's accumulating, no one's buying, no one wants anything, everyone's staying away from the market, the prices are going down. But we learned years ago, when prices are going down, that's when rich people are buying the most. That is always the time when we end up getting tons of whale news. $4 billion worth of Bitcoin was just moved. This website just sold $180 million worth of Bitcoin. Who bought it? It's always the exact same thing. When you think of all the Bitcoin in the world that has been mined or created, 17% is now in the hands of retail investors, everyday normal people. So what's the flip side of that? That means that 83% is held by the wealthiest people on the planet. Yeah, see, it's a whole different situation then. When you talk about the idea of every person being able to have 300,000 Satoshis to themselves if it was equally distributed, that's one thing. But then when you talk about that there's certain individuals on the planet, like there's a company that has 140,000 Bitcoin. The guy who owns that company, it's believed that he also has over 100,000 Bitcoin. If we get to the point where Bitcoin is actually worth $1 million, $3 million, the craziest one I ever saw was someone saying that Bitcoin in about 20 years will be worth around $10 million. What does that once again do for also in that scenario, for those of you who are wondering, a lot of people usually ask or come up with how could Bitcoin be worth that much money? The idea is that people would take notice and see that Bitcoin's value continues to increase as the, circulating supply drops, as people choose to not sell their Bitcoin, they lock them up, they put them away, or as the mining reward continues to get cut in half, Bitcoin's value would then increase. This is the logical idea behind it. And as people see Bitcoin's value increasing and the value of fiat currencies, paper currencies decreasing, they would choose to put their money into Bitcoin more than they would the US dollar or the yen or the euro. When you talk about a multi-million-dollar Bitcoin, it has to do with the fact that this is the idea behind it, that people would take notice and see that, hey, Bitcoin has done exceedingly well comparatively to stocks and to bonds. Let me take out some of my money from stocks and bonds and put it into Bitcoin. Bitcoin's price goes higher because hundreds of millions of people around the world are then doing the exact same thing. So it's like a weird self-fulfilling prophecy. As Bitcoin's price then goes higher, people begin to look and say, well, that's crazy. If I had had my money in Bitcoin, I would have outperformed the market more than I had when I had my real estate. People would begin to sell off their real estate, and therefore that money would then go into this is the idea. When you hear people say $1 million Bitcoin, it's not coming from nowhere. It's the idea that historically over the last 13 and a half years, we have seen a number of people choosing to allocate their money into Bitcoin as opposed to other asset classes. I have done the exact same thing. I choose to put a portion of my money that I'm making into cryptocurrencies as opposed to even buying real estate or other things because I believe in the longevity of the space. If you get over 1 billion people on the planet doing the exact same thing, this is going to have a monumental effect on the price of Bitcoin. When you talk about a $10 million plus Bitcoin, you're talking about nearly the vast majority of equities, of stocks, of commodities, of real estate, also of gold and silver. Remember when we were talking about, and I showed you the chart just a couple of days ago, where we were going over the chart of how well, what was it? I think if you had put $1 into gold and silver versus if you had put $1 into Bitcoin, how much money you would have made since 2009 or 2010, I forgot which metric that it was. If you had put $1 into Bitcoin since 2009, I think you would have, what was it, like $2.1 million or something insane like that. Yeah, it was several $1 million, as opposed to if you had put it into gold, it was $1.67. So there's a major difference between that. And the idea is that this will continue happening as time continues going on. More people will realize the value of Bitcoin. oh crap, I should have put my money into Bitcoin. They start throwing more money into Bitcoin. Bitcoin's value goes up. And then when you talk about the $15 million plus Bitcoin, the scenario would be is that people begin to convert their debt into Bitcoin in whatever way that might be possible. As it's believed, I think there's between fiat currencies, what is it called? There's like different levels of money. There's like a level 1, level 2, and level 3 of money. And basically, if you convert all the money that we have in the world into US dollar value, is like $40 quadrillion. It's something absolutely obscene if you put all the money in the world together. And if half of that money moved into Bitcoin, we'd have roughly around a $100 million per coin Bitcoin. So that's kind of the general idea. Just so I could, clarify, because I'm sure we haven't spoken about that topic in a long time. So I'm sure a lot of people were like, where are you getting these numbers from? How could Bitcoin ever actually hit that kind of valuation? I've said it for a long time. These rich people aren't dumb. They know exactly what's going on. There's a reason why we keep hearing Fidelity and BlackRock and these institutions and Visa and MasterCard getting so heavily into the cryptocurrency space, because I believe that they know exactly where all of this is going. So they're trying to secure their position, because if you have a chance of buying an asset that is $16,000 that could potentially go to $1 million, you as a bank with several $1 billion that you have to be able to throw around, you're going to start investing really heavily in this space, and this is just what we've been seeing. But bringing it back to the actual point, the issue is that Bitcoin isn't for the wealthy or the rich. It's for people who aren't part of the current financial system. And if you even tie in Bitcoin's prospect of being able to move up in value, it's for everyday normal people. It should be that 83% of Bitcoin's total supply is being held by everyday normal people, not just 17%. So this is why I mentioned years ago, and still hint at now, hey, don't let the rich people buy up all the Bitcoin. Remember that thing that was posted on Twitter when the week when BlackRock and Fidelity announced that they were getting into crypto? Someone posted on Twitter, they said, don't sell your Bitcoin to the rich. Because remember when the whole FTX fiasco happened and everything fell apart? And we started getting tons of whale news that whales were buying up tons of Bitcoin. It was the Bitcoin that you were told to be scared about and sell off, and they bought it up for a lower price. Remember when Bitcoin was at 25,000 and then fell down to 15,000, and all the news was just about whales buying up tons of Bitcoin? Yeah, that's the reason. A Glassnode chart shared by Clemente shows the percentage of Bitcoin supply held by retail investors is on a steady climb dating back to 2011. Glassnode defines retail as holding less than 10 Bitcoin in a wallet, currently worth nearly 169,000. Most people don't even have an entire Bitcoin. Nonetheless, if they're defining a retail investor as someone with 10 Bitcoin or less, that's insane. Not many people, especially over the course of this year, I don't know many people who have nearly $17,000 to be able to throw around and buy an entire Bitcoin. Nonetheless, 2, nonetheless, 5. That is a very, very weird metric. Here's the chart right here. I tried to enlarge it as best I could. This purple line right here is anyone who is holding 1 to 10 Bitcoin, as you see it increasing right there. And there's like a very light blue line. You can barely see it. It's people who are holding between 0 to 0.001 Bitcoin. That is 100,000 Satoshis. The next one is the orange line right here. And that is if you are holding 1 million to 10 million Satoshis. So 0.01 to 0.1 Bitcoin. Very, very fascinating. The rich are buying up everything on the planet. Every single thing. Have you been watching documentaries? So remember over the course of 2020 and 2021, when real estate prices were still rising quite rapidly. I think we spoke about it on this channel for a little bit. There were so many news stories that all these wealthy people, they're buying up every single asset that they can right now. It's really, they're buying up all the real estate. They're buying up all the land that's out there. They're buying up all the crypto. The people who rule the world will eventually rule the world forever, and there will be no contesting it because they have everything. What happens when you own everything? Do you sell it? No, you own everything. It's absolutely crazy. So always keep that in mind. Don't let the wealthy who are already wealthy win. What's the point of us going into another system where these people own all the Bitcoin the same exact way that they own all the money on the... 3 people own more than half the world's population. That's the Bitcoin circulating supply in the hands of the rich and of, and I air quotes here, the normies. And yeah, let's move on. Also in news, New York State registered banks will need to seek regulatory permission 90 days before they get involved into crypto, even if it's via a third party. New guidance from the state banking regulator has said banks will have to submit business plans and operating models to the Department of the Financial Services, including details of which customers they are targeting. The guidance published on Thursday said, and I quote, "Today's guidance is critical to ensuring that consumers' hard-earned money is protected, that New York regulated banking organizations remain resilient and competitive, and that the expectations are clear for those that wish to submit proposals for virtual currency-related activity." This was said by the Superintendent Adrienne Harris. She said this in a statement. Working backwards, one, that's a lie. The United States and New York care nothing about hard-earned money that people have made. This is made completely evident by the high rents, the high cost of living, and also like none of these protections are ever really put in place when it comes to people, once again, buying gold and silver. It has nothing to do with people's hard-earned money then. It's simply they're buying an asset. This has almost nothing to do with if people are getting a mortgage to buy a place. Banks will fall over themselves, trip on their own feet to offer you a fluctuating interest rate mortgage that lasts for 30 plus years so that you are continuously paying the bank. That has nothing to do with a consumer's hard-earned money or trying to protect people from understanding what's going on. Same with predatory loans. It's always the same over and over. But when it comes to crypto, this is when the regulators and the banks and the yada yada, they all say, well, we have to make sure to protect people's money. Well, please do it across the entirety of the board. Make sure that if someone goes into a store, I don't know, where do people buy gold and silver? I don't know. And they're trying to buy a piece of gold, show them a chart that shows them exactly how gold's price hasn't moved comparatively to Bitcoin. If people are trying to get a mortgage, let them know. By the time you have kids and your kids are in their 20s, you will still be paying this and you are going to have a fluctuating interest rate that could go anywhere from 1% to 15% depending on how the bank feels. It's always the same. It's always the real. If you hadn't noticed, it annoys me a little bit that these people can lie so blatantly in front of everyone. They said the department takes seriously the potential risks that novel activities, including in particular virtual currency related activities, may pose to covered institutions, to consumers, and to the market in general. There are a lot of people, say it this way. There are a lot of cryptocurrency skeptics who are coming out of the woodworks now and who are announcing that they're terrified that if crypto becomes too big, that it's going to overtake the traditional financial system, which is going to do, it already is. And that if that happens, the traditional financial system will collapse. So I was looking around as to like why people were saying, because I saw it from like a surface value and then I was like, I get it. The people who are most afraid of crypto are the people who are not getting into it. It's the people who made their money from the old system, from the old legacy financial institution things that we're trying to get rid of because they're all complete garbage. And if that collapses, those billionaires lose all of their money. So of course they're going to have a very difficult time with something that they refuse to get into or don't believe in or think or tell other people could be an actual risk or something is terrible. It's because they made their money from the old system. Of course Warren Buffett doesn't like us. Of course Munger doesn't like us. There was some other one. I think it was Nurio Rubini, and there was also some other guy who was in a movie. They all are re-mentioning that crypto is becoming too big. If it becomes too big, it's going to become its own stratosphere, have its own gravitational pull, and they don't like that because that's not how they made all of their money. So once again, New York comes in clutch. Not only is apparently New York a terrible place to do business, but now they're trying to make more regulations for banks because if you don't release news like this unless you know that tons of banks have actually come to the regulator to be like, hey, we need to get into crypto right now. So they have to wait 90 days before. Think of that. You come up to me and say, hey, I want to buy an orange. And I'm like, oh, dude, an orange? We have a lot of them, but you have to wait 3 months for that. Why the 3-month waiting period? It's to de-incentivize and disencourage. Is disencourage a word? Disencourage. Wow. Discourage people from actually even wanting to get into crypto or trying to find another way to make money from the legacy financial system. Unsurprising. I don't know why New York is. I believed for years, maybe it was just the news and TV, that New York was like the place to make money. But every single time that something happens with crypto or another coin launches or this thing pops up, it's always New York, that New Yorkers that can't use it or can't get into it or can't invest into it. It's been this way forever. Why can every other state in America get into stuff except for New Yorkers? Wouldn't it make more sense that New York would be first before the other 49 states, as it's supposed to be this gigantic financial hub? I guess not. That's the New York banks who want to get into crypto have to wait 90 days and ask for permission. News. Yeah. Let's move on. Also in the news, Daniel Allegre, Alegre, is the new CEO of Yuga Labs. His new gig was revealed this morning, less than 72 hours after it was announced that he was stepping down from his position as president and COO of Activision Blizzard. That's Activision and Blizzard are gigantic. Like, they're not a small company. He was COO of Blizzard and he left to go to Yuga Labs. You don't leave a COO position at Blizzard, one of the largest gaming companies on the planet, to go work at Yuga Labs unless they are paying you a significant amount of money. A couple of years ago, there was news about like acquisitions. Coinbase was like hiring a lot of people, as was Binance, and also Ripple as well. They were hiring a lot of people for like regulatory purposes, to have these people on your team to basically make sure that you were, you needed an industry leader who knew the other regulators, basically, to be able to, like, if there was a problem, they had a friend who could talk to the other friend. But we were hearing like this person was being offered like 15 million a year by Coinbase. This person was being offered 9.6 million a year, which was a lot higher than their previous job. I wonder how big this guy's paycheck is that he decided to leave Blizzard to be able to work with Yuga Labs. Okay, there we go. I thought his name was Luring Allegre. I was like, what? Luring Allegre, over to the blockchain technology company behind the Bored Ape Yacht Club, CryptoPunks, and other side, is quite a corporate coup for Yuga Labs. Yeah, understatement. While helping to lead Activision Blizzard since early 2020, Allegre had a hand in developing well-known brands like Call of Duty, World of Warcraft, Diablo, Overwatch, and Candy Crush. Do you understand I wonder how much money they paid this man to leave? Do you know how big those brands are? These are like the largest games on the planet. And he left to go to... That leads me to believe... So whenever I hear news like this lets me know that... This is my personal opinion. This is me. This is when I start throwing personally more money into ApeCoin and other things that are associated with it. Because the amount of people who they have working with them, all the partnerships that we've been hearing who've been partnering with Yuga Labs, it's a little insane the last couple of months. They have such heavy hitters who are basically industry leaders who are now going to be working for them, and they know other people in the industry. If you make a game, if you make a spin-off, if you make a toy, if you make a movie, if you make a TV show, which they all have planned for the Bored Ape Yacht Club, you can easily get those pushed. You can make them look amazing. You can make sure that the marketing team knows exactly what's going on. Now imagine if they... No, anyway, I was going to elaborate further on ApeCoin, but it's really like these... This has become such a staple in the NFT space. The Bored Ape Yacht Club universe, they also have their own metaverse and stuff like that. It's a bit intense, like how big it's become. His resume also includes 16 years spent across several leadership roles at Google. They paid this man a whole bunch of money. They said Daniel has held one of the highest level roles at one of the largest gaming companies in the world. Yuga Labs co-founder Wiley said in a prepared statement, he brings valuable experience across entertainment, e-commerce, and global strategic partnerships, all of which are critical aspects of an immersive Web3 world built by creators and for creators. This was actually super popular news when it was released, therefore news I missed. I, once again, feel like I don't even have to wish them good luck. I assume the entire project is going to go off without a hitch. Like, if we're hearing about this acquisition, like, openly, like us, like, we got this information, I can only imagine what... How do I say this? I wonder how big this project is going to be over the course of the next couple of years as we hear about more things that are happening with the project and other things that are going to be happening, in no uncertain terms, simply because it's already quite huge and the NFT is still pulling huge amounts of money. So the previous all-time high for ApeCoin was 26. I think that's when I first got into it. So can it go to 50? Can the coin go to 100? It's all these questions I have in my head. That's the Yuga Labs. Has a brand new CEO, and he's from Blizzard. That's insane. Yeah. Alrighty, I don't have the thing open. I just realized it right now. I don't know why I keep doing that. But I don't have the little transaction people running around thing open. But I do hope that you've all enjoyed. I do hope that you all are having a great day, a great morning, a great afternoon, a great evening, wherever you are. Apparently that's him. Okay. Wherever you are, or wherever you might be, I do hope it's absolutely fantastic. Thank you all once again for watching, listening, liking, commenting, and or supporting. It's always very much appreciated. And I will most certainly be talking to you all soon. See you.